Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world one filing at a time. Today we're diving into a report from Nuburu Inc. and let me tell you, it's a bit of a head scratcher. It's like they're trying to juggle flaming chainsaws while riding a unicycle on a tightrope. Let's see if they manage to pull it off. We're looking at an 8K filing with the earliest event reported in March of 2025. An 8K is basically a company shouting, hey, something important just happened, and they have to tell the Securities and Exchange Commission about it. So what big news did Nuburu have to share? First up, Nuburu got into an agreement for up to $15 million with Supply Alla Capital, our company in London. Now, Supply Alla Capital, or SIM for short, is all about helping manufacturing and trading companies manage their inventory, basically what they have in stock. Nuburu's investment in SIM is expected to be funded by SFE Equity Investment, SFE Argel, and the plan is, if all goes well, Nuburu will end up owning a controlling chunk of SIM. This facility or loan is repayable on demand, meaning they might need to give it back sooner than expected. It officially matures or ends in June of 2026. They'll have to pay interest like a fee for borrowing the money, and it will be based on what the Federal Reserve sets plus an extra 10%. The interest payments are due every 3 months, with the first one in June of 2025. Now here's where it gets interesting. Nuburu can turn the money they loaned into shares of SIM stock, but only after a few approvals, including the OK from SIM stockholders, financial authorities, and a group called the Panel on Takeovers and Mergers. If they get the thumbs up, they can convert the loan into shares at a set price. Plus, for every 2 shares they get, they also get a warrant, which is like a coupon to buy another share later at a slightly higher price. But if these approvals don't happen by September of 25, Nuburu can demand that ISAM pay back the loan in cash right away. To make sure they get paid, SIM might have to offer up some security, like their rights to certain inventions and the money they're owed from some of their businesses. To add another layer, Nuburu's executive chairman Alessandro Zamboni is also the founder and current chief executive officer of SIM. So he's essentially making a deal with himself. Next, let's talk about stock. Nuburu authorized the sale of common stock for a few different reasons. They authorized shares of common stock to Seco Eta's Next Gen I, affiliates network for some AI solutions and automation. They authorized shares of common stock as consideration servicee, also authorized shares of common stock to SFET as ASIA's consideration for SFE guaranteeing the company's performance obligations pursuant to its previously announced transaction to acquire TCERSA with Targel. So it's all stocks for services. They arranged Chatasan Region for Phoenix MGMD Consulting LLC for investor relations services. They also authorized shares of common stock to SFE as consideration for SFD emptying the Consulting LLC for investor relations services. They also authorized shares of common stock to SFE as its consideration for Phoenix MGMT. Consulting LLC for investor relations services. They also authorized shares of common stock to SFE as consideration for SFE guaranteeing the company's performance. There's a catch though. They can only issue a certain amount of stock, up to 19.9% of the company's outstanding shares, until the stockholders give their approval. They also have to register these shares so they can be resold later. These securities or stocks are being sold privately to certain investors without registering them with the SEC. This is allowed under a specific rule called Section 4, Alman to Time 33. Finally, as with any SEC filing, there's an exhibit. This one includes the cover page in a format called Interactive Data File, which is just a fancy way of saying it's a computer-readable version of the document. So what's the story here? Nuburu is making a significant investment in another company, but it's a bit complicated. They're loaning money with the potential to convert it into stock, but it all depends on getting approvals. They're also issuing a bunch of stock for various services which could dilute the value of existing shares, and the fact that their own executive chairman is involved on both sides of the deal raises some eyebrows. Overall, Nuburu seems to be making some bold moves. Their investment in SIM could be a good thing for them if it ends up giving them a controlling interest in the company. SIM with its fintech platform could provide Nuburu with some interesting opportunities to grow. On the flip side, there's a risk. If they don't get the necessary approvals, they might have to demand repayment, and SIM might have to give up some valuable assets as security. Issuing new shares could give them the resources they need, but it could also hurt the value of the shares that are already out there. Plus, having the same person on both sides of the swine deal creates a potential conflict of interest, which could raise questions about fairness. So Nuburu's direction is a bit unclear. They have some potential strengths in their technology and strategic investments, but they also face some risks and questions about how they're managing things. I'd say keep an eye on them, but maybe with a bit of caution. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and definitely subscribe for more corporate decoder videos.